Hello, my name is David, and the presentation that I am doing is going to be on the book Building Your Financial Portfolio for $25 a month or less. It is a book about how to safely invest your money in the stock market. Now, a lot of us have lost money in our 401ks due to the stock market crashes. A lot of us have invested money during day trading, things like that. So we've had a huge problem with the stock market recently. But the book that I read cautions against pulling your money out of the stock market based on these facts. It's all about the long run. The premise of the book is all about safety and growth. Safety in the stock market, it says, comes with a very long period of time. If you have your money in over, say, 10 years, then you will safely invest it. Whereas if you're just looking to invest for a couple months, maybe the stock market is not the best option for you. And the growth of the stock market over the long run has been proven to be the highest growth rate of any sort of investment that we have. The book says that you need to pick your stocks wisely. Pick large stocks that have a history, have stability, don't fluctuate too much, show a lot of growth. Not guaranteeing, of course, that they won't go down, but they will guarantee most likely to go back up. The book also says that when picking your stocks and looking for this financial security, you need to pay attention to what it is that the companies that you're investing in do. Meaning that computers and things like that are very kind of just at the whim of technology and the trade of technology securities. Whereas things that people actually need, food and pharmaceuticals, are the companies that make those sorts of things are the large companies that stay in business, and they sell products that we're always going to need. The book gives a example of Johnson & Johnson, which is a large company that the authors of the book recommend highly. It gives the example that if in 1994 you invested $100, then if you took it out 10 years later in 2004, it would actually be worth $445. If you had continually put in $25 a month after that 10 years, just for that $25 a month, you would have $14,000. If you did that over 20 years, 30 years, and you continued along with that sort of reasoning, your growth is humongous, and you're starting to look at maybe a retirement fund or a child's college fund, something like that. This is what the book is talking about. This is why it's safe to invest in the stock market. The book also goes along and says that you shouldn't go through a financial broker or a finance firm because you're giving your money to somebody else to manage for you, and they're taking cuts from companies who want to sell you their stock. It gives a huge outline as to how you can call the companies directly and buy the stock through them and make that investment so you are actually a part owner and you're not managing your money through somebody else, you're managing it yourself, and then you just sort of sit on the stock and you buy more stock, and then with that you wouldn't have to have the need to manage it too much. You wouldn't have to get too deeply into stock trading. It would simply just be an investment in your future, quite like a savings account, except it would pay much, much greater. And I think that just on a personal note, it's very important to invest in our market, because if we stop investing in our market, then the market itself will cease to exist, and the USA will stop having the humongous amount of financial capabilities that it does, and we will lower our complete quality of living, if you will. And that's why I agree with this book. Thank you so much for your time. Have a great day and a good rest of your semester. It's been nice having this class with everybody.